Hey everybody, this is Greg Gossett, and today is Sunday, August 7th, 2022, and I appreciate you coming and spending time and taking a look at my Gossett Trading and Mentoring Weekend Review. So, hope you are having a good weekend. I hope you had a good trading week last week. The format of today is, first of all, we are going to run the U.S. legal disclaimer. Secondly, we are going to come back. We are going to take a look at my current positions. We're going to talk about when I bought them, why I bought them, and how I am going to manage them going forward. After that, we are going to talk a little bit about trader psychology, always the most important part of trading. It really, really is. There's an old saying that the 70-20-10 rule, which I really do like. Oops, I lost, there we go. The 70-20-10 rule, 10% is identifying the trade, 20% is managing the trade, and 70% is managing yourself and your emotions. It's really true. That is the most important factor. So that's why I do like to spend some time each podcast and talk about trader psychology. After that, we are going to do a little poem for my good friend Frank. He always writes a trading poem relevant to what's going on in the market, and I really like those, and just want to share that with you. After that, I have gone down through my watch list. I have identified some potential swing trades for next week for myself, and so I think I've identified 4. The market has moved up significantly on this rally, which is great for the longs. But as far as new entries, there's not a whole lot of juicy looking setups, but there are some, and some of them are going to be to the short side. So I will go over those as well. And I am going to, next week, I have some projects I'm not going to be able to trade. So with my current positions, when I have to leave the trading screen, I'm going to just go flat. And so I won't have a podcast next week at all. But the previous week after that, I will go through and show you where I got out of the current positions, not because they hit any stops or anything like that, but just because I'm going to be away from my trading screens. All right, but I do want to go over what I will be looking for as far as potential trades for this coming week. All right, so I am going to run the U.S. legal disclaimer. I'll be back in about 40 seconds, so please hang tight. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. Okay, thanks for going through that with me or holding on for that. All right, first up is Rio Tinto, RIO. I did buy Rio, got a really good entry on it all the way back here on the 15th of July. Entry signals were an under 30, over 30, an intraday under 30 RSI reading, also a bullish engulfing bar. Got long Rio here at 55.35. Of course, I placed my emergency stop 2 ATRs below my entry. And just to go over this quickly, whenever I find a new entry, I need to decide how to position size. And a good rule of thumb is, taking your total capital in your account, 1%, 0.5% is a decent rule of thumb, depending on how aggressive you want to be. But for this example, let's just go with the 1% rule. So if I had a hypothetical $100,000 account, 1% of that is $1,000. I take the $1,000, I divide it by the value of the 2 ATR, which is over here. That's going to tell me how many shares to buy. Now, of course, if you had a $50,000 account, 1% of that would be $500. $25,000 account, 1% would be $250, $1,000,000, 10,000, right? But for the hypothetical, let's use the $100,000 account. 1% of 100,000 is $1,000 divided by the value of the 2 ATR. That tells me how many shares to buy. It also shows me how far below my entry my emergency stop will be. Again, went long here, 55.33, put my emergency stop 2 ATRs below. So if it did go down there, I would have lost the hypothetical $1,000. My end of day stop is the opposite of why I got into this trade. I got into this trade with an intraday under 30, over 30. If it had closed below 30 RSI, I would have gotten out. That would have been my end of day stop. Orange line up here is my 1.5 ATR trailing stop level. Whenever I enter, if it moves 1.5 ATRs from my entry, then I go into trailing stop mode. 1, 2, 3, 4, 5, 6 days after I bought it, it did get to my trailing stop level. Doesn't mean I have to take any action. It just means that if I have a close below the previous day's low after that, I'm going to get out. Did not happen until the 2nd of August, where I did get out of half of my position at 59.54 for a 7.04 gain. Also, I do take partial profits from the previous day's close whenever it moves the value of 0.45 ATRs above my entry. So basically what that means is anytime I have a big move up more than 0.45, then I'm going to take off a percentage of my position when the market is giving me profit. So whenever you have these big days up, I took, I think, 3 profit targets here. I took 2 here. I took 1 here. I took 1 on Friday with this big move up. So I like to play offense. I like to play defense. The defense or the trailing stops, the end of day stops, the emergency stops. The offense is selling a portion of my position into strength. Nice big update on Friday. Whenever I move 1.5 ATRs from my entry, when the entry signal was an under 30 over 30, then if it ever got back to my break even, I would just get out. Okay, so I'm way above the 1.5 ATRs here, but if it did come back down to the entry point, I would go ahead and get out. So this particular trade, the remaining portion that I have, entry to exit right here, about 8.85%, and had a 520 crossover on Friday, which is a good sign. Now, if I get up to a 65 RSI level, right now we're at 51.97. If I got up to a 65 RSI level, then my trailing stop would be a close below the 5 EMA. Alternatively, if I reject the 70 RSI, I would get out of another half. After rejecting the 70 RSI, if I then get another close below a previous day's low or a previous bar's low, I would get out of the entire trade. So I know this kind of sounds complicated. You know, in this podcast, I can't go into great detail. I do teach private one-on-one lessons in the evening time where I teach you all 5 of the different trading approaches that I use. I teach you step by step. It's a great course. And if you're interested, there is my email is in the link of this YouTube video. So just send me an email. And at the end of the podcast, I'll explain a little bit more about that. But anyway, so this Rio trade doing really well. The remaining portion up 8.85%. Okay, let's switch over to my other position, DDM. Now, I do trade on different time frames. I trade dailies, I trade weeklies, I trade monthlies, I day trade all day long. To me, I think it's a great philosophy to trade different time frames. Sometimes one time frame works, the other ones will not work, but it's a nice balance and it's a big part of my trading. So weekly bars, I'm going to take a weekly trade on Friday, because that's the close of the bar. So I did buy DDM, which is double leverage Dow. Bought this back here on the weekly bars on a Friday on, let's see what happened to here we go. On July 15th, here when we intraday rejected the 200-week moving average, I bought this at 58.25. Now, of course, when I bought it, first thing I have to do is I have to decide how many shares to buy based upon the value of my account. 1% divided by the value of the 2 ATR shows me how many shares to buy. It also shows me where my emergency stop's going to be. It's going to be $10.19 below my entry. You can see the orange line up here. What's that? If you remember correctly, that's 1.5 ATRs above my entry. So I'm not in trailing stop mode yet, but it has been a really nice trade from entry to current position, about 8.79%. And again, as always, whenever it moves up more than the value of 0.45 ATRs, I'm going to take partial profits, 10% of whatever I had. So the first week after I bought it, took a profit target. Second week, took another profit target. And of course, my end of day stop would, or end of week stop on this one would just simply be a close below the 200-day moving average. So the Rio trade, the DDM trade, doing very well. All right, so here we go. Oh, sorry, that's the poem. Here we go. I mentioned at the beginning, want to talk about trader psychology before I start looking at potential new setups for next week. This is from the Divergent Trader again. Please follow him at Trader Divergent. I think this is such a great post on trader psychology. And I might want to point out too that you know, if you're having a difficult time in the markets, we all have them, right? We have great periods, we have horrible periods, and sometimes those horrible periods, you just feel like you're never going to make any money again. I've been trading for 27 years, and I have been through periods where I thought I am never going to lose another penny trading, and there have been times where I thought I am never going to make another penny trading. Well, neither of those are true. You will lose. If you've been on a run, there will be a time where you lose money. If you've been in a losing situation, there will be times where you make money as well. And the reason I like this is because this is such good advice if you are in a drawdown. So less risk equals less emotion. Makes sense, right? If you have one share, you're probably not going to stress too much about a move one way or the other. If you have 10,000 shares, any little move is going to rev up your emotion. So less risk equals less emotion. If you're feeling fearful, then reduce your risk. So if you're in a drawdown, you are probably feeling fearful. And so if you are in that state, do yourself a favor and reduce your risk, because with the less risk, you're going to have less emotions, and you're most likely going to be more likely to follow your plan. Then as confidence grows, scale back to your original size. And it's so true. You know, if you read Market Wizards, some of the best traders in the world will say, look, if you're in a drawdown, what do? Simply put, reduce your risk. Just try to print some positive trades, because sometimes you get into this downward spiral, you get into this momentum to the downside where nothing's working. And honestly, the best thing you can do is reduce your risk when that's happening. And then when things start to turn around, you start to print some black ink or some profitable traders, then it helps you with your confidence. And as the Divergent Trader says here, then you can scale back to your original size. So trading tip, less risk equals less emotion. If you're feeling fearful, then reduce your risk. Then as confidence grows, scale back to your original size. And so kind of what that does by default, it helps you lose less when you are trading poorly, and it helps you, and if you scale back to your original size when you're trading positively, then you're trading with a larger size when your trading is good, trading with a smaller size when your trading is bad. Does that make sense? I think this is great. Good reminder from me, and just wanted to share this with you. And again, please follow at Trader Divergent over on Twitter. Okay, one last thing. Well, actually, two more things. This is a poem from Frank at Frank OD. Frank is a great trader, great musician, great journalist, and just all around great guy, and a great trading poet. My gosh, follow Frank at Frank OD. Today's market poem. There's more to the market than meets the eye. Many try to predict it or give it a try. If it were simple, we'd all be rich. That's no lie. But those who trade those who trade it know it's stealthy and rather sly. My gosh, is that the truth, Frank? Let's do it one more time. There's more to the market than meets the eye. Many try to predict it or give it a try. That's true. If it were simple, we'd all be rich. That's no lie. But those who trade it know it's stealthy and rather sly. Markets are tough. Markets are tough. Best thing you can do is just follow your signals, get out when you're supposed to get out, position size correctly, and like I just mentioned in the psychology section, reduce that risk when you're trading poorly. When you're trading great, then yeah, you can increase it to a point, right? So, all right, one last thing before we get to potential setups for next week. Just kind of a fun thing. I saw this on Twitter, just wanted to share it with you. Woody Harrelson responds to viral baby lookalike with personally written poem. Look at these two. Is that hilarious? And he did go on to mention that I'm jealous of the little baby's hair because, of course, Woody doesn't have hair. So anyway, just kind of a fun thing here before we get started looking at the charts. All right, here we go. As I mentioned, the market has been going up pretty significantly, which is great. But as far as looking at new long positions, a little far and few between here, actually. So what I'm looking for on Amazon is, well, with all swing trade positions, I like to look for a confluence combination of indicators. If you look at Amazon here, of course, we've had this big run. We've had this breakout that keeps moving up. Right now we have a RSI level of 69.52. The previous day we went above 70 and then below 70. So, if I were long this, I would have gotten out here on Friday, at least half of my position, because we had a over 70 and then we closed under 70. That would be my signal. I'm not long Amazon, but what I am looking for here is I'm looking for a rejection of the 200-day moving average sometime next week for a short position. So if we closed under the 200 and then over the 200 and then close back below the 200, that would be a short signal for me. Of course, I position size, I place my emergency stops to ATR above. If I had to close above the 200-day moving average, then that would be my stop. So it has not rejected the 200-day. I don't have a position, but what I'm looking for next week would be some kind of close above the 200, then close back below, or an intraday above and then close back below. And what I like here is the confluence of we're at this near the 70 RSI level, and a large percentage of equities or markets when they reject the 70 RSI level, it could be a potential intermediate, at least, term top. So on Amazon, I'm looking for a close above, close below, or some kind of intraday rejection of the 200-day moving average to get short, keeping in mind it has the confluence of the rejection of the 200-day moving average at the same time at the 70 RSI level. So I like the confluence and the combination of a short position on Amazon if we have some kind of rejection of the 200-day moving average. Boeing, all right, kind of similar, not as high on the RSI as Amazon, but we are at 64.08 RSI. If I get some kind of rejection of the 200-day moving average next week, then I will look for a good risk to reward ratio for a short on Boeing. Johnson & Johnson, all right, this is a long position. You can see here's the 200-day moving average. Last time we rejected the 200-day moving average, we had a nice rally up. Then after that, we got right to the 200-day moving average again, and it kept moving up. So there are buyers at this, there have been buyers, I should say, at the 200-day moving average. Now, this would have been a legitimate entry on Friday with this intraday rejection of the 200-day moving average. Honestly, I didn't see it. Otherwise, I probably would have taken it. But if I get but if in this coming week, if I get some kind of rejection, another confirmation of the rejection of the 200-day moving average, then that would be my entry. There's a 250 here moving average. There's a 300-day moving average. So somewhere in this area, with the rejection of the 200, the 250, or the 300, that's what would get me interested in going long Johnson & Johnson. In addition to that, we do have a double bottom with a bullish divergence. So this first bottom here, you can see how deep the red MACD bars are. This is a momentum indicator that shows the momentum was very strong to the downside. Then we rallied, we had some green MACD. Now we've come back down and we have just a little bit of red. So you can see this first bottom had deep red. The second equal bottom had very little red, showing potentially a lack of running out of sellers. So and the implication of that would be to go back up. Maybe we'll see, right? We have to follow the rules. But again, if I have another rejection of the 200-day moving average or the 250 or the 300, being that the 200-day moving average has been respected and we have the double bottom and the bullish divergence here, I would get long Johnson & Johnson. Again, if we reject the 200, the 250, or the 300 next week. Okay, here are the cues. Well, interestingly enough, I'm zooming out here a little bit. Look, we're at a 65.70 RSI, so we're getting close to the overbought levels of the 70 RSI. We're also at the third ATR channel here. 92% of prices tend to fail at the third ATR channel. I drew this green line here over here. Here we have a big up move. There's some liquidity here, multiple points of price, equal price. I think it's very likely that the market could potentially run these, but here's an order block. And an order block, you know, I've talked about ICT, inner circle trading, show you this here over on YouTube. It's just ICT. 2022 ICT mentorship. Just type in ICT, go to the videos. I really suggest watching videos number 3, 6, and 9. I'm not an expert with this, but this is a very popular channel, educational channel. These fair value gaps, these order blocks are very accurate, sometimes to the penny. And so do yourself a favor, go over, watch some of that. But this is an order block here. So very likely it's possible that we could not make it above this 330 level. Who knows? Who knows? But this is not a setup for me. I'm just kind of looking at this as the major kind of an overview of the market. But we are getting close to running into a 70 RSI level. We are getting close to this order block here. So who knows? This market has really gone up. You know, an easy trade here, if it moves this high, I don't know if it will, but just like on Amazon and Boeing, if we rejected the 200-day moving average at the 6th ATR channel, I would certainly get short here. But no short on Qs, just wanted to mention that. The other thing I wanted to mention too is that the market has obviously been moving up and up and up and up and up. But look at the volume. The volume has been moving down and down and down and down. So I think we are running out of sellers. So it gives my kind of bias would be to the downside. Tesla. All right. Well, Tesla did have a short signal on Friday because we closed above the 200-day moving average and then back below. I didn't want to get short here because it's moved so far away. It doesn't give me a good risk to reward ratio. But if we come back up and we test the 200-day moving average and reject it, either a close above and then a small close below, or just an intraday rejection of the 200-day moving average, I would get short again on Tesla. We had this little trend line here that got broken to the downside, but a lot of times it will check back. But I really like this trade on Tesla to the short side. If we rally back, reject the 200-day moving average again and the third ATR channel here, right? That would be a double rejection. Remember, 92% of prices fail here, and then we have the 200-day moving average. So this is probably my favorite trade. It's not ready to go yet. It would have to reject the 200 again, but that's what I'm looking for to the short side. Oil. Well, oil has just fallen off a cliff, if you can see here, right? My gosh, it was so high up. Well, now we've come back down. Is it going to keep going? I don't know, but we are getting close to the 200-day moving average and the negative third ATR channel. So a good confluence of potential buys here. So, and we have a double bottom bullish divergence again. Here's the low, deep red. Here's the equal low, not so much red to the downside, very shallow move down, again implying that we could be running out of sellers. So next week, what I'm looking for on USO would be some kind of close under, close back over the 200-day moving average, or an intraday rejection of the 200-day moving average, and especially keeping in mind that we have the double bottom with the bullish divergence, and we are getting into kind of some low RSI levels of 3809. So looking for rejection of the 200-day moving average. First of all, if it crashes down through that and we reject the 200 or the 250, I would also go for that as well. And then last but not least is XLE. Of course, XLE is energy, so it's going to be similar to gold. But again, last time we had to close under, close back over the 200, it held as support nicely. Doesn't mean it has to this time, but what I'm looking for next week would be some kind of close under the 200, close back over, or an intraday rejection of the 200-day moving average. So that's what I have for next week. And like I said, I'm going to be in and out this week. And then next week, I'm going to be gone working on a project and away from my screen. So most likely sometime this week, with the current positions I have, Rio and DDM, I'm going to just go ahead and get out of them so I don't have to worry about them or manage them until I get back. And next week, I will not be doing the podcast because I won't be able to. All right. So, as I mentioned at the beginning, if you are interested in lessons, I do teach a really great course. It's 15 hours, 5 hours each session. 5 sessions. Each session is 3 hours. It's a great course. I've taught people from all over the world. I think one of the best ways to learn anything is to have a coach that can coach you one-on-one. There's a lot of rules with how I trade here, and I don't really have the time in this podcast to go through them. I mean, it takes me 15 hours to really teach it properly, right? But if you're interested, do yourself a favor. I can help you with your trading. I really can. I've helped so many people around the world, and I have my email in the description of this video. Just send me an email and then say, Greg, I'm potentially interested in your course. I would reply and say, great, sounds good. Let's have a Skype call, get to know each other a little bit. It's not a sales call. I promise you, it's not a sales call. I just want to learn more about you and your trading, your challenges, your goals, what you're hoping to get out of the course, and then also it's a good time for you to ask me any specific questions about the course. And then after we're done with the call, I will put it in your hands. I won't contact you if you decide you want to do the course. Just email me back. We'll get it scheduled. And it is $1,750, by the way. Sounds like a lot of money, but it is worth every penny, I promise you. And then number 2, if you like online courses, I have a great online course at udemy.com. The link's in the description. I teach you the deep dip buy strategy. Actually, all of these trades lately, the swing trades that I've had on the weekly and the daily, have come from the deep dip buy strategy. And it's such a great course. It's 9.5 hours. There are 15 study guides. There's 26 videos total. And the best part, it only costs between like $12 and $15. It's a great place to start. So the link's in the description. And then lastly, if you like this podcast, if you found anything helpful or healthy, I would appreciate it if you could just hit the thumbs up button. Lets YouTube know that there's some valuable content here. Keeps the channel going so they can get it out to more people. So I think that's it. I always like to say, please try to go out and do something nice today for another human being. If you could also go out and do something nice for an animal, that would be twice as good. Animals and humans like acts of kindness, and I think it's good karma, and I think it will help you. And if you need it one day, I hope someone's there for you to give you an act of kindness. So enjoy the rest of your weekend. Keep in mind that next weekend I will not be doing the podcast, but I will be back, God willing, the next week after that. So hope you have a good week. Follow your plan. If you're doing well, congratulations. Don't get too cocky. If you're not doing well, Keep in mind the sun will come up. There's light at the end of the tunnel, but please reduce your position size. If you're in a drawdown, it's probably the best advice I could give anyone, and including myself. All right. If you have any questions, please leave them in the comment section. Anyway, be nice. It's been a while since I've had a weekend off. So next weekend we'll have the weekend off. Won't have the podcast, but we'll be back after that, hopefully. All right. So take care, everyone. Appreciate you spending your time here. Hope your life's going well, and have a good rest of your weekend. And on the way out here, I have to run the U.S. legal disclaimer. Thanks a lot, everyone. Talk to y'all soon. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.